Wow, I feel like today is going to be a massive episode because we have Bitcoin, breaking down. Technically, it is at support, which we'll talk about today. We have a special guest joining us with a very interesting trade setup. But yeah, Bitcoin has been dumping over the last 24 hours. Gold has also been dumping. Never thought I'd see the end of the gold parabola, but it's now starting to struggle. It actually hit 49.50 today in a big liquidation wick. You can also see silver hit $96. Equities also pulled back. We have a new Fed chair. And I think it's amazing to have Fabian here today because he is super up to speed with what's happening from a macro perspective, also from an altcoin perspective. So we're going to chat about everything today, Fabian. We're back with the Friday show, so welcome. There's going to be a lot to go through.
Yeah, thanks. And it's great to be back. It's been a little bit too long since we've done this last time, so good to get the ball rolling on these again. And like you said, there's a lot to cover. So yeah, let's get into it.
Yeah, we'll be back with the Friday shows. I'm now doing daily updates Monday to Thursday. Then we'll do this bigger one on Friday where we really unpack everything that's going in the market from a macro point of view, charts, and also altcoins. And then on the weekends, I'm kind of giving myself some room to drop an evergreen, more of an edited, like single topic banger. But let's start by, where do we even start? I think we got to start with Bitcoin here. Just overall, before we get into gold and everything from a macro perspective, like how are you feeling about Bitcoin? And maybe we can discuss some of the reasons for its weakness as well, because this has been a pretty ugly chart to look at, and it's clearly like at a major support now. So key reaction zone.
Yeah, it's definitely at an interesting place. Big picture. So there are kind of a few macro concerns that the markets have been having. And over the past couple of days, towards the end of this week, it wasn't even only Bitcoin that, has been selling off. We actually saw a sell-off across broader asset markets such as gold, which you have up on your screen right there, and even equities to some extent. And so what I'd be looking for broadly on Bitcoin is really for it to kind of hold the lower end of its range here above that 80 to 81K mark as we get through, all of the macro woes, uncertainties, and concerns that the markets have right now. And through to the other side of that, and perhaps, as TradFi markets, whether that be the metals market or the equities market, finishes their capitulation. If Bitcoin can hold this area as we get to the other side of that, then that, in my eyes, would make for a really good long setup from here. But I guess we could break down, each one of those things one by one as we go on in the show.
Yeah, and we have a special guest joining us soon who's going to give us a long setup actually on Bitcoin. So the exact execution you guys can copy. But before we get into that, let's talk about some of these things. I think there's been a few things which have held Bitcoin back. The most obvious one is the fact that we had ridiculous like supply overhang. There was a mixture of OG whales selling. There was a mixture of miners selling. There was a mixture of, some DAT unwind as well happening when we were above 100K. So I said this in a video earlier in the week. It's kind of created this self-fulfilling prophecy where the OG whales that have sold their Bitcoin, they're, who are probably advocates of Bitcoin, have created a scenario where Bitcoin as a digital gold is underperforming gold, the asset that's been going up. So they've created this issue through all of the selling. So now, when Bitcoin really should be reacting from a macro perspective like gold, because there are many factors which, lend towards that, which we'll speak about today, it's underperforming. And it's caused a lot of those same people and, the broader Bitcoin market to kind of say, look, what is the identity of Bitcoin? Is it a digital gold because it's not behaving like it? Is it a risk asset? Well, it's not going up when risk assets are going up. So what the hell is it? And this identity crisis, I think, is one of the big reasons, aside from some of the other stuff we'll probably discuss today, like quantum, for underperformance, in my opinion. Do you share a similar view? And do you have any nuance that, you can provide as to Bitcoin's role in the macro economy as an asset?
Yeah, so I personally think it's always too much of an oversimplification when everyone just looks at gold rallying and says, number one, it's due to the debasement trade, and number two, Bitcoin should be following for the same reasons. I would actually argue, first starting with gold, that a lot of the factors that have caused it to rally recently aren't necessarily have anything to do with the debasement trade. So in terms of debasement in the most general sense, where fiat currencies lose value versus real assets, or one fiat currency like the US dollar loses value relative to others. We haven't seen enough evidence of that on an absolute basis to justify the full rally in gold. What I think is actually going on behind the scenes is that there were a few more kind of idiosyncratic factors to gold that all added up and compounded on each other to create this rally. So for one, just going through them, I do think we're seeing a flight to gold, number one, in the US from portfolio and fund managers who have realized in recent years that US treasuries aren't necessarily the best hedge against equities anymore, right? It's the death of the traditional 60-40 portfolio allocation. And so they're looking for alternative assets to replace their treasuries in those portfolios with, and gold is really one of the standout ones for which to do that. Bitcoin is still a little riskier, much more volatile, much more speculative, a lot younger in its life cycle. And so it doesn't get as much allocation in traditional portfolios as something like gold would. So that's one. The second thing is there has been huge buying from central banks, also diversifying away from US dollars, US treasuries, things of that nature into gold. And I think that's been another really large kind of demand driver for it. And then I think more recently, we've also been seeing more of an acceleration from retail themselves into gold, and particularly from the East. So from countries like China and Japan. In China, their real estate bubble collapsed, as of a couple years ago, hasn't really come back strongly yet. And so a lot of people are looking for a new place to store their wealth. And in China in particular, Bitcoin for the most part is in somewhat of a gray area. It's harder for most people to access. And in both China and Japan and a lot of the Eastern world, they tend to be more conservative, right? And less kind of, way out on the degen risk curve like we are here in the West. And so they're more culturally kind of acclimated to store their wealth in something like gold than something like Bitcoin. And so I think we're seeing a lot of flows from them. And then, once you get all of those things kind of kicking off the initial rally, you always get momentum effects following, right? You get retail FOMO, you get supply squeezes on derivatives, contracts, futures, et cetera, and it takes off from there. So if you ask me, I personally think that the combination of those factors probably had more to do with what we're seeing in gold right now than currencies actually debasing in real time, at least not to this extent.
Yeah, Henrik Seeberg actually made a comment on this today, said there's no de-dollarization, there's no inflation. What is happening is a hype about de-dollarization and inflation. And this has created inflation expectations to soar. So he's basically saying there's a disconnect, similar to what you were saying, between the narrative that's being pushed and what's actually happening behind the scenes. So I would say that's true. And I would say the other thing is, like, this whole dollar collapse narrative. If the dollar was really debasing to the point where it was completely worthless, like that's ultimately a trend that would take, 10, 20, 30 plus years to eventuate. This isn't something that just happens overnight. That's also not in Trump's best interest either with his, national security goals. So I think it's always an overblown, the narrative almost comes after the run, after gold runs, then the narrative comes. What would you put Bitcoin's underperformance down to though? Like, do you think the macro situation is because there's been a lot of talk about debasement and liquidity increases and, basically they're printing money and these are all the narratives that are flying around at the moment. Rates are coming down, although they've been paused recently. Do you think the macro situation is as supportive for Bitcoin as what people say it is? Or do you think there's also been maybe a misconception there?
Right. So this is where I think the real nuance comes in, right? So when looking at, let's say, the really big picture macro backdrop, I do actually think it's very supportive, very conducive for Bitcoin in particular, but that's over a long-term time horizon, say, call it the next 6 to 12 months plus. In the more immediate term, in terms of all of the things that are moving things from a daily to a weekly to a monthly basis. So we just described like a lot of the drivers for gold. Now, when you contrast that to Bitcoin, Bitcoin is actually first, in my opinion, as of the past 1 to 2 years, since the advent of the ETFs in America, and then especially after Trump took office and publicly supported Bitcoin, Bitcoin is no longer, at least not as much as before, being seen as a globally neutral asset. In fact, it's starting to be seen as an asset that's intralinked or tied directly with the US, right? And so we have seen that actually being reflected in its correlation. In the past, it did exhibit a mix of correlation between the NASDAQ and gold, but more recently, that correlation has been skewed much more heavily towards the NASDAQ. So high beta US tech stocks, and almost not at all to gold. And the data speaks for itself there. So when we're talking about some of the factors that were driving gold, like for example, one being capital rotation out of US assets, right? We saw the US dollar fall this year, as well as US equities actually underperform their global peers, right? Foreign markets have greatly outperformed US equities. And so that tells a story of capital rotation out of the US. And because Bitcoin is seen somewhat as a US asset, that money flows back home to, let's say, Japan, China. They allocate some of it to gold, but Bitcoin doesn't fall in that bucket. And so I do think from a kind of, big picture view, a lot of Bitcoin's underperformance could be attributed to the fact that it's now linked to US assets, which have been underperforming broadly this entire year, as opposed to something like gold. So I do think that's one side of it. And then, of course, it does have its own idiosyncratic kind of factors coming into play. There were obviously a bunch of fears that we've discussed on this channel before surrounding things like the treasury companies, surrounding things like quantum, etc. I personally think that all of those are probably a little bit further out in time, but they could have an effect on OG holders selling. And one thing that's very unique to Bitcoin, unlike gold as well, and unlike other global assets like equities, etc., is that a lot of the supply is very concentrated in a more early holder base, right? And that's really just because it's a newer asset. And so a lot of the supply is still in the hands of those OGs who bought, 5-10 years ago and hold it to this day. And so narratives like that could spook them, and they would have an outsized impact on this market in particular, more so than other markets like gold, which has less concentrated supply allocation, etc. Right? So I do think that's a part of it. And one other thing that I don't hear talked about much, but I do believe is going on under the hood, is the fact that a lot of Bitcoin miners, which have transitioned into AI data centers recently, are probably selling down their Bitcoin. If not existing Bitcoin holdings from the past, at least more of their newly mined Bitcoin than they've been doing before this. And in fact, one thing I'm going to be keeping a close eye on is we do have most of the big miners reporting earnings sometime in February. And it will be interesting to see, once they update their balance sheet on a quarterly basis, if they were in fact selling down some of their Bitcoin holdings over this past quarter in order to fund those large CapEx expenses. So I think, all of those things, you put it together, and then it always creates, once again, these kind of like reflexive, momentum-driven loops, right? And in this case, that's negative. So then you start getting more narratives popping up, more downside reflexivity, and it kind of takes off like that.
Would you include quantum in this list of like tail risks which have affected allocators?
So I would, in the sense that it probably had an effect on a lot of early holders, so the quote unquote OGs of the space, who again do probably hold a disproportionate percent of the supply. That plus the 4-year cycle fears probably compounded and caused a lot of selling from them. I don't think that quantum is actually affecting a lot of institutional investors.
Because there was that one case, there was that one guy that I think it was Chris Wood, or if that was his name, who sold because of quantum. So that kind of got the narrative going that, maybe it is affecting institutions.
Right. You're always going to have, a couple of them there. But I personally think, if you look at like the grand majority of institutional allocators, as well as retail, so the small guys that, allocate via ETFs, etc., it probably hasn't had as much of an impact on them as the narrative would suggest.
Do you view it as an issue going forward? I actually spoke to Rand about it today, and he thinks it's a big issue because he doesn't know exactly how it gets resolved.
I do think it's definitely probably Bitcoin's most, pressing existential issue over the course of maybe the next 2 to 3 to 5 years, something like that.
Yeah.
And honestly, I haven't given it enough thought either as to, how it could get resolved. But I also think that that's far enough out still that it likely isn't impacting the short-term moves that we see. So for example, when Bitcoin fell from 97K to, 81K just earlier this morning, I don't think any of this can be attributed to quantum. However, you do see the narrative, pop up on the timeline more whenever Bitcoin's down, and then all of a sudden when price is up, it magically goes away, right? No one's talking about quantum anymore. So I don't think it affects the short-term moves, but yeah, big picture, it is definitely something that the community will have to work through.
How do you think, just to flip the script a little bit, how do you think this stuff resolves? Like, what do you think how do you view the backdrop for Bitcoin this year? Do you think there's a scenario where this flips and it gets reflexivity back? Like, what could be the triggers for that? Because it's a very, as you mentioned, reflexive asset that either it's in a pretty aggressive upward spiral or it's in a pretty like reflexive downward spiral. What is the trigger for the pivot on Bitcoin when we get a pivot? Whether it's now, we'll speak about shortly with Moran, whether it's now or soon, or whether it's slightly lower in the 70Ks. Like, what can turn things around here?
Yeah, so that's the $1 million question, right? And to be 100% honest with you, like, I'll be the first to say that I don't know. It's like the outlook for this year, in my view, is very murky. It's very hard to tell. I do think we're in for a choppier year overall, not only for Bitcoin, but for, broader markets, for equities, etc., going into the midterms. I do think it'll be a volatile year both ways. But you can never count it out. We so many times in the past, when everyone said, that it looks as over as it could possibly be, something happens, reflexivity kicks in again, and all of a sudden we're so back again, right? So you can never count it out. Now, what exactly that trigger will be on higher timeframes, I don't exactly know. And so at this point in time, I'm kind of focusing on just assessing one step at a time, right? So my first kind of priority right now is, where does Bitcoin go from here? What are the likely paths, and what are the potential triggers for upside or further downside from here? And then after that, I'll look forward to the next move. But it's really hard to kind of look ahead 2 to 3 moves right now.
I think this is the perfect time to bring on Moran because he's gonna give us a potential move. So, Moran, welcome to the stream. If you don't know who Moran is, he's one of our amazing analysts in the Mars High Club, and I would say you're mostly like a high time frame swing trader, so more less frequent trading than Paradise. But when you do trade, you do so with conviction. So I think we could be approaching a conviction trade now, right?
Yeah, exactly. This is the setup I'm going to talk about is one I've been waiting with all the guys in the Discord for quite some time. But going over BTC, one of the things that was important just to note was the shift in context. And obviously everything's easy in hindsight, but I just wanted to go over just one of the tools that I talk about in my streams in MHC, which is the weekly 1225 EMAs. And the simple rule that I told myself throughout the start of this cycle was, when these weekly bands start to cross bearish, that is when, for me, I am going relatively risk off overall in positioning, but I'm expecting price to shift from an uptrend into a downtrend. And that sort of changes how I trade and the levels I look to trade. So we can see we already crossed bearish. So my bias in the Discord remained that, shorts will be the higher probability trade, which is what we nailed, right? Every time price was trading into the range highs back in December, mid-December and also at the start of January. These were all shorts that we took. Now, in terms of the long side, the only area that I was interested in doing business was down at these range lows. Because no matter what the higher time frame context may be, I can only focus on sort of what's in front of me and the next setup, which was price trading into 80.6K. Now, the reason this swing low is important to me is if we have a look at this template that I am showing on the screen, this is a aggr template where it is showing me the amount of absorption aggregated across various exchanges. And we can see here on these are the sort of the delta spot. So when you see these big sort of orange bars, right, the larger they are, the more aggression there was from sellers. And from all this aggression from sellers was being absorbed by your sort of larger whales or institutions, right, with their passive limit bids. So we had an enormous amount of absorption when we traded into the 81K lows. So I knew that if price is to trade back into that level, do we see that same amount of support from the passive limit buyers? And as we can see here, this delta bar is probably one of the largest bars I've seen in the past 6 to 8 months. So already I know that there is a lot of sort of support at that level. But the thing that I don't necessarily like at the moment is, I wouldn't position long right away because we have sort of front ran that swing low. And considering that the overall context is to the downside, if I'm going to take a long, it needs to be a very high probability setup. Now, it's not going to be a swing long, but it still needs to be high probability. So the setup that I'm looking for is, you could just drop down to the 30-minute time frame or even the 15-minute, is we have our key range low at 80.6K, and we have these sort of internal lows that I've formed at 81.1K. Now, what I'm looking for is that same level of absorption that took place at these wicks. If price is to trade back into that level, I'm going to be looking sort of at the delta, also at the positioning, right? And I want to see a strong amount of aggressive selling being absorbed. Now, the high probability setup will be price taking out the swing low at 80.6K, as that's your high time frame level. But what you can do is you can use this internal low as a execution trigger. Because, if price could trade down into here, and maybe we just keep rolling over. So if you're setting a rule such as if price trades into the low, wait for a reclaim of this swing low, and then you can look to position and set an invalidation around the 80K or just below. So that to me is, the main setup that I'm looking for. And, I'll be using the delta template as well as just looking at the overall sort of open interest and positioning. Like one thing to mention is this big liquidation, it's happening based off of, long positions closing. So even though we're having longs closing, which provides like a lot of selling pressure, right? As you're a forced seller, I'm then looking at the delta and getting the context that like, okay, there was still a lot of absorption. So that to me is, the main setup that I'm looking for over the coming days or week in terms of positioning long.
I think there's really good advice here for people that it's not just about a level. We can talk about levels, but it's also about how does price react to that level? And there's obviously more subjective measures. And then there's, hard measures, quantitative measures like you've exhibited here with delta, for example. So that stuff actually matters more. The reaction to a level in totality matters more than, whether it hits a level itself. And that's where, you want to start on a higher time frame, like I showed before, the weekly chart, the weekly range or the daily range. But then, for execution, you want to go down. I mean, you're on the 15-minute, 30-minute H1. Try and pinpoint your entry if you want something solid with, more importantly, decent risk management. Otherwise, I mean, the other option is you could just like DCA long at like 80K. Like I don't mind that idea, but you've got to have some sort of invalidation trigger.
No, Exactly. And like you said, levels are just levels, right? The money that I make from trading is not just solely based on identifying levels, but what sort of sets someone apart is knowing exactly what you want to see unfold at a specific level. Personally, I use the footprint for executing, which is a more granular way of viewing the delta. So when we're getting sort of these set up and I'm updating it in the Discord, it's not just, hey, I'm taking a long, this is my stop, but it's sort of going over my thought process of like, this is what I'm seeing. This is what it could entail. I'm seeing lots of absorption, prices reclaiming. This is a good opportunity to start to position. Then you can trail your stop if we get this scenario. And I think that's just what is far more important, is explaining all of the thought process in real time as the trade develops, right? From the execution to the management and to the closure as well.
If we lost this 80K region, what would you do? Because Paradise earlier today spoke about 64 being on his radar. So from a high time frame perspective, what are you seeing? What are the next support levels?
Well, I mean, for me, and I think kind of what Fabian spoke about before, where it's, I'm not really thinking too many steps ahead because it's easy to kind of get lost, right? The more you're trying to think ahead, the more sort of variables. So for me, if we're going to lose this 80K, which is, again, it's completely plausible, right? Because the higher time frame context is a downtrend. But if we are to lose it, you can see that I kind of have this larger range that I formed. And the low that stands out to me the most is going to be these sort of April 10th equal lows, right? So we had a double bottom here. This is what stands out to me the most. And so first is identifying the level and then sort of building the context around the setup. So even if this is a high time frame range, the trend is still to the downside. So it means I could still look for a possible mean reversion trade, which just means, shorter duration and I'm not holding it as a swing. And then I'm breaking down, okay, so we have these high time frame swing lows. Now, what do we have just below? So I can see here and probably make it a bit more clearer. If I go to the 3-day chart, we can see that we have this sort of demand zone that was never fully retested. So this was the consolidation that led to a big move up. And when we came down, we front ran it as the context was bullish. So it's quite common to front run these key demand zones. So this level here is what I would look for. So I'd want to see, right, if we could just completely ignore this 80.6K level, I want to see price come down, take out these equal lows, ideally trade into the demand zone. And for my execution, I would solely wait for a reclaim of these swing lows. And how I execute remains the same. So it's a swing low, right? This is a swing low here. But now what I'll be looking for is exactly the same thing. I'd want to see aggressive selling below this level from ideally shorts, but it could also just be longs closing. I'd want to see it being absorbed by a passive limit buyer, which I'll look for on the footprint. And then once I see price start to reclaim and we see the positioning flipped from being sellers to now sort of new longs starting to position into the market, then I'll look to position. And again, as I said, the higher time frame context for me is still going to be to the downside. So all it means is that I could still look for longs, but I'll be more aggressive with my take profit. But that to me is this sort of 74K level, which just stands out as sort of the next ideal level to look for a mean reversion if we are to lose the 80.6. But definitely 64 from what Paradise is looking at. The good thing is, we trade sometimes similarly, but we have different systems in terms of how we execute, how we identify levels. So for me, I'm happy sticking from one level to the next. I'm not trying to think kind of too far ahead because it doesn't do me any good as a trader, right? But that's to me how I would play these next two setups on BTC.
And I think as an investor, this isn't anything to panic at either. It's just being aware of this stuff. And I mean, if we did have hypothetically an opportunity to accumulate Bitcoin in the 60s again, that would be, are fucking amazing, in my opinion. I know, some people are all invested and that creates its own set of issues. But for me personally, as a believer in Bitcoin over a multi-year period specifically, that would be a huge gift. I remember when Bitcoin was 100K and I was like, fuck, if I could only get the chance to buy in at 90 again, I'd love to add more. And then now we're at 80. And so if we're in the 60s or 70s, that's pretty much 2x back to highs. That's a pretty good return. You're not getting a return anywhere near that on equities or gold. Obviously, it comes with more risk, but yeah, I think from that perspective as well. Even though I think shorter term, you've got to, as you said, play level to level and be a little bit more cautious. I think there's huge long-term opportunity here on Bitcoin, and we'll get into some alts at the end as well, because I think it'll be a similar story across some of the key infrastructure pieces of crypto.
I think the last thing I'll just like to say is, I've made a push more with the members in the Discord, to start sharing a lot more insight in how I use order flow and particularly the footprint, and also kind of make a series on how I execute my trades. And I just finished off recording, a whole series on how I use the footprint in my own trading, right? Because I think what's important is it's very easy to just make a series and going over just every single definition, even on the stuff you don't use. But what I've seen lacks kind of in this market is people sharing exactly how they utilize these tools with live examples. Because it does no good just telling someone like, hey, this is the footprint, this is absorption, and I'm waiting for a reclaim. But giving live examples and talking to the members, during our live streams with an open mic is, something that helps a lot. So just finished off the footprint series, including a TPO series. And the next episodes that I'm going to start uploading will be just a guide on pure execution using price action. So for some people who don't have experience using order flow and want to just keep using price action, then that's something I've also been working on for the members as well.
Amazing. Yeah, I think that's something you really bring to the Discord, that education side, which I think is really, really important in a market like this. The other thing I'll say about that is, like, I said this in my Discord post this morning. At the end, I said, like, this is probably the most important time to be in the Mars High Club, which is funny because most people think, oh, when the market's going down, then it's not worth it. But I actually think it's the opposite. I think when the market's going down, this is the time where you need people to help with risk management, also capitalization, because when you have the market dropping, that's when you can capitalize the most on opportunity, whether it be swing longs as you're discussing, whether it be accumulating select assets at very attractive prices. That's when you see those reversals, that's where you make the most money. So I actually think right now is like the best time to be in a really serious community that can help you through this time, and then furthermore help you succeed. Because I see so many people, they ape into the Discord, and we see it in the numbers, when the market's high and when they think they're going to make a quick buck on alts. But you don't see that same zest for the market when the market's low, even though that's should be the opposite. It doesn't really make much sense, but I guess that's just human psychology. So if you don't want to join, we have the link in the description as always. And Moran will be updating this entire trade, I'm pretty sure, in his channels as it unfolds and as things evolve as well. So yeah, Moran, thank you for coming on.
Thank you so much for having me. It's been a pleasure.
We'll have to get him on again. And got some good content planned with Moran. But Fabian, want to ask you about something quite important. The new Fed chair. We saw today that Kevin Walsh is in. Now, I want you to explain a bit more, because I don't think I understand this fully, but apparently he supports a stronger dollar. Apparently he's slightly more hawkish. At the same time, though, I don't think Trump would be necessarily supporting this if he thought it would be too much against what he wants, which is, well, seemingly a weaker dollar. So how do you view this? Do you think it's going to impact the dollar and rates, or do you think Trump's going to get his way? What do you think of Kevin Walsh?
Right. So this was one of the major things that I did have my eye on coming into this week. And it was also a concern for markets more broadly. The concern was that Walsh would be a hawkish Fed chair pick. Now, it is worth noting that he has been on record stating that he is supportive of further rate cuts at this juncture. And sure enough, like you said, I don't think Trump would pick someone who he wasn't convinced would be cutting rates into the back end of the year, at the very least. But beyond that, he has also made kind of hawkish leaning statements in the past, specifically showing that he leans more towards the side of really trying to curtail inflation, and seemingly a little bit more so than Powell did. And what that means is that if inflation does become a problem in the future, he's more likely to try to combat it a lot quicker and a lot more aggressively. And so that could potentially be hawkish further in his term. The other thing is that he has also been an advocate for the Fed reducing their balance sheet. And so that is actually anti-QE, right? Rather than expanding the balance sheet, which is what the Fed has started to do now, he's not a big proponent of that and has actually stated a lot of the times in the past that he prefers going the other way. And so when you put those things together, the market does view him as the more hawkish pick out of the contenders that they had. Now, what's super interesting is that rumors that Warsh was going to be the pick actually leaked overnight, right? So we had polymarket odds go from under 50% favoring Warsh to all the way to I think it was 95% this morning, just before Trump officially announced him as the pick. And so it did get leaked overnight. And the immediate moves that we saw in the market was dollar up, treasury yields up, and especially long end treasury yields, so 10-year, etc., and risk assets down, right? So we had Bitcoin take another leg down to 81K. We had equities down, and we also even had gold down and other metals. Because a more hawkish monetary policy outlook would affect all of those assets. So we did see that initial knee-jerk reaction, but after the announcement officially came out, so just, 1 or 2 hours ago, we haven't yet seen continuation. And so what I'm looking for really closely now is into the US market open, because as of this recording, the US market hasn't opened yet, but will we get continuation of those risk-off moves as a result of this Fed chair pick? Or has the worst already kind of been priced in and markets are looking ahead and saying, you know what, at the very least, Warsh isn't going to want to disappoint his boss, the man who just appointed him in the first year going into midterms, right?
That's
He's
exactly the thing. You see Trump's post in front of you. I'm nominating Kevin Walsh to be chairman of the board. Congratulations, Kevin. I have no doubt he'll go down as one of the great Fed chairmen, maybe the best. This is big raps from Trump. So hard to imagine, Trump putting him in this position, giving him these raps if he thought that he would be going against him. Feels like it's politically charged.
Exactly. Now, it is worth kind of remembering that actually Trump was the one who appointed Powell as well during his last term, right? And we kind of see how that went. So, the way I look at it is it's kind of a toss-up, I think, about which way Warsh will go, say, 1 year out from now. But at the very least, over the next 6 to 12 months, or at least into midterms, I think he's going to play ball. And so over the short to medium term, I don't see it as a major problem for markets. And we'll just have to see, what his stance is as we go from Fed meeting to Fed meeting after that.
People are forgetting that everyone loved Powell. Well, everyone in the crypto space loved Powell in 2020, 2021. And it was only until he started to flip hawkish that everyone started clowning him. He was praised when he was pumping markets.
Yeah, well, we like what's good for our bags, right?
So it's all just biased. But yeah, I kind of think in the short term this is not as important as some of the other factors in the market. I think for crypto specifically, something that's really important is the Clarity Act. I don't know if you've been following this, but there's a few more steps to go. What do you think of what's happening with the Clarity Act, which is obviously the key crypto bill, which is set to regulate a bunch of crypto assets, including stablecoins?
Yeah, so I actually haven't been following it probably as closely as I should have been in recent weeks. So, everything with more recent developments. I do know there's been some stalling and it's being pushed out a little bit. There's some internal conflict going on with it. But I'd actually love if you could fill me in a little bit on what's going on there.
Yeah, so it's basically just a debate over the fine print now. We had the 12-11 vote. No Democrats voted yes, but the 60 votes are needed to end the debate and move things forward. And yeah, I think it's going to be a little bit more time now. I think we're talking weeks or months. So no clarity on the Clarity Act yet. And then we can move towards it. I think it's going to happen. That's basically what I'm hearing, but it's just taking a lot more time than we thought. So I don't think it's a huge issue. I mean, you have had like Brian Armstrong and a few other big players in the space come out and like advocate against it. They've said we don't actually like the bill. So I don't know if it's the huge bullish thing that it was, made out to be in the early days. That said, if it's not passed, then that would be a huge issue, a huge risk that's not priced into the market. Specifically for like stablecoin adoption and just legitimization in the US. I think that's the main thing. And it kind of feels like right now, you mentioned it earlier, like it very much feels like it's China and gold versus Trump and Bitcoin, It kind of feels like the crypto is like Trump's play. And that kind of makes me think, we were discussing earlier, what is going to be the catalyst for Bitcoin and for crypto? It very much could be political. Like, we don't know exactly how that's going to look. That there was this hopium tweet, which I think is just complete hopium, about the US government coming in and buying a bunch of Bitcoin as a matter of national security. Like, I don't think that will happen, but it is hard to imagine Trump not wanting, especially because, a large part of his campaign hinged on it, and, major legislation is hinging on it. Not wanting Bitcoin to increase. I mean, the whole family is very involved. His son, grandson. So I find it hard to believe that they won't be supportive. I guess for the rest of the video, because we could talk for ages about Bitcoin, I'm actually seeing gold going down to 5K now. Actually, before we get into alts, let me ask you, do you own any gold? What's your plan with gold? Because I actually added some today, and if this goes back to 4,900, I might add some more. But this is long term for me. This isn't short term. But interested if you hold some as a diversification play.
Yeah, definitely. So I do hold some gold as like part of my long-term portfolio. I've been tempted to sell it many times on the rally, and glad that I haven't. I did skim around, some of it from like the trading portion of my portfolio a lot earlier. So some regrets about that, but thankfully I have a long-term allocation to it. The way I'm looking at it right now, so one thing in particular that probably has an outsized impact on gold, depending on how it resolves, maybe in the coming days over the weekend, but more likely in the coming weeks over the course of this next month, is that there is still geopolitical tension around a possible conflict with Iran, right? And I haven't seen a lot of people mention it on my feed over the past couple of days. But if you take a look at Polymarket odds, and I'm not sure, are you able to pull up Polymarket on your screen here?
Yeah. Oh, no, it's very difficult.
Okay.
VPN.
Well, no worries then. Gotcha. Okay. Well, if you do take a look at the Polymarket odds for the listeners out there that want to check, there has actually been a pretty meaningful increase in the poly market that the US will launch a strike on Iran over the next couple of weeks, starting from just yesterday. So it does seem like something might be brewing under the hood. It does look a little bit like, there could be rumors going around on insider circles that Trump is actually preparing to launch an attack sometime in the coming weeks. And as we all know, gold is or one of the primary kind of hedge roles that it plays is that as a hedge against geopolitical risk, and especially risk of war or conflict, right? So I actually kind of do like the idea from a short-term trading perspective of looking for a buy on gold anywhere from here already. Down to the 5K mark, it's already down more than 10% off its highs. And previous corrections over the past couple of years have actually only been peak to trough around 10% as well. Maybe say 10 to 11% on average. There you go. And even the ones before that. And so I kind of like the idea of a short-term swing here. At least I'm personally starting to kind of nibble on it, and will do so if it comes down more, ahead of a potential US strike in Iran. And then once that resolves, which it always does, with due time, that might be the point at which I reassess, okay, has, gold reached the peak height of its narrative momentum and retail FOMO for this point in time? Because really big picture, and I'm going to continue holding a spot, position in gold for my long-term portfolio regardless. But in the big picture, I do lean towards the prospects that gold probably will top out sometime this quarter, at least locally, and maybe go through a bigger correction or bigger consolidation phase at the very least over the next few months and quarters following this. And so, yeah, from a short-term trading perspective, I like buying the dip here into possible escalation with Iran, and then we'll reassess from there. But big picture,
What's your big picture, like multi-year view on gold?
I mean, my multi-year view on, I would say, any alternative asset to fiat currencies, as we're undergoing, what can be described as a fourth turning regime shift in the world, deglobalization everywhere, acceleration in terms of technology, as well as volatility, geopolitical volatility, potential for things like war, remilitarization from the EU and other countries, et cetera, et cetera. As long as those megatrends are still intact, I do think this thing can run for the next few years, but it won't be without pause, right? So as a trader, the question becomes, well, when does that happen? And the corrections could be pretty violent, as they are with any asset that goes parabolic. And I do think we're probably in somewhat of a local blow-off kind of phase, or in the innings of that at least, even if it goes on for a couple more weeks here, with basically the whole world, FOMOing over metals right now. What do you think?
If it does retrace, though, I mean, it could do this little echo bounce with what you're talking about, and then maybe a bigger consolidation. But we're only talking chill, maybe the biggest dip being 4,500. I don't think it goes. I don't think even if it tops, it goes back to mid threes, fours. Do you? I see it more consolidating around this prior high. I mean, it's just all speculation at this point, but.
Yeah, no, I would agree that to get back down to, let's say, 4K or below would take something really, really big. And I don't see what it would be right now. Never say never, of course, anything can happen and we just have to go with the flow. But as of this point in time, I'm definitely not counting on it. What I was looking for to add to longer term, spot holdings was something like a 20% move. So if we get 20% or greater peak to trough drawdown on gold, that's probably where I'd start looking to accumulate for a longer term hold.
Yeah, look, the way I see it is exactly how you pointed out, and I think everyone's at a different stage in their journey. For me, I've made enough money where protecting it comes into play, and I think you'd probably be in a similar position. We don't want to round trip our financial freedom. So when you're trying to diversify, obvious things like gold, property come into play, and you'd be stupid not to allocate a decent chunk long term, which you just sit on. So for me, my gold, I mean, this is multi-decade, really, really multi-decade. So it doesn't really matter for me if I buy at 4K, 3.5, 5K, even 6K, really, because I think you need to put your money somewhere. If you're earning fresh income, obviously you want to reinvest some back into the business. You want to reinvest some into high risk assets like Bitcoin, altcoins, stocks. But you still need to put a decent chunk away. And treasury bonds, I have a fair few. It's a little bit at risk at the moment with this US. I don't think a dollar collapse is necessarily going to occur in a super short time horizon, but we're seeing things shift. And I think it's risky to hold too much US dollars. So you need to hedge against your FX, and gold is clearly one way that you can do that. So for me, that there's a very clear need in my portfolio. I hope Bitcoin takes that role one day. And I think, I actually hold more Bitcoin than gold, and I'm more bullish on it long-term in terms of returns. I think I could make much bigger returns in Bitcoin, but it doesn't stop me wanting to hold gold because it's it's my sleep at night play. Like if you can stack a decent amount of gold, if everyone the number will be different, but if you can just have a certain amount in gold and you just never touch it, you're never going to go broke basically. Unless, if gold collapses, we're so fucked. So because this is supposed to be the safe haven asset, it's like historically been the safest asset you can buy. Obviously, the higher you buy it, the more risk you now take on, but also, the money supply is just continuously increasing. So unless we see deflation, then I can't really see the trend for gold. And if there was, I don't know. I think we have bigger issues if there's deflation. And I think, central banks have shown in recent times that their antidote has very much been to print money. And then there's also more broader factors, like we're heading into a huge AI race. And you mentioned militarization. There's also the weaponization of AI as well. And the race, the energy in the AI arms race that, China versus US, but also other nations are undergoing in order to achieve supremacy in what is such a big field. And winning that race relies on economic expansion. You cannot win that race if you don't have the capital to necessitate building data centers, mining essential minerals and resources to do that. So it's hard. You also need water. You need also clean water. You need to desalinate water. It takes energy. This whole race just can't be. You can't run that race on a deflating, a deflating economy, a non-productive economy. So even if you have to engineer that through debasement, so be it, I think is the attitude of America, the attitude of China. So that bodes well. So this goes into the whole macro picture for assets in general, property, Bitcoin, gold, equities. And I think you should hold all of them. I hold equities, I hold gold, I hold copper. I love, and I think you get the best returns trading risk, whether it be low cap stocks, altcoins, Bitcoin, you obviously get way better returns. And that's where I spend the most energy. And I speak about it the most on the channel because it's the most fun. Altcoins are by far the most fun. Gold isn't that fun, but just hold some and hedge yourself a bit. But I understand other people will be watching this video. They're like, I don't have millions of dollars, hundreds of thousands of dollars. So I only have $5,000, $3,000, $2,000. I think you're in a slightly different position there where you're probably, my advice would be probably looking at investing more capital in yourself. I'd be investing money in AI tools to become more productive, or investing in a startup idea, or investing a bit of capital in trading so you can pick up a new skill. When you only have a couple $1,000s, I think it's about skill acquisition more than it is diversification. This is just my belief personally. So I think gold becomes a bigger factor for people that are managing big treasuries. And I think if you're not in that position, then you're more in a wealth generation phase, and that's where alternative assets come into play a little bit more. Sorry, I went on a bit of a rant, but that's how I view it in the broader scheme of my portfolio.
Yeah, no, that was great.
So yeah, that's my view. Let's quickly touch on alts before we head off, because it's a long one. But since we haven't done one in a few weeks, I feel like we've got a lot to cover. Look, a lot's happened in your channel. You've been fucking active in your altcoin channel, which is great. I won't leak all the alpha because we want to keep some stuff. Well, ideally a lot of stuff for MHC members, but you had a great trade on Hyperliquid from 20. I showed it on the show. Up into the mid 30s. You had a great trade on KLED. It was up 100% overnight. Now coming down a little bit, which I'm actually thankful for, because fundamentally I'm bullish and I never really got a strong entry. So I'm actually targeting this range low. I know it's ugly for holders, but if it kind of looks like we're going to come back down actually and tag the lows on KLED. So 0.017 would be great. MNT, I think you pulled the trigger a bit early. I was waiting a bit longer for this zone we're into now. I'm a little bit worried we're going to lose it, so I'm waiting to see, and maybe even Moran at some point could have a look. Waiting to see how we react into this zone, because we are in my zone now. We're kind of doing that scenario Moran spoke about. Actually, I'll get Moran back if Moran wants to speak. When you have a situation like this, what's your next step? I know you trade more Bitcoin, but MNT, it's the exact scenario we discussed on Bitcoin. It's it's just slicing through its support. So how would you play this?
Let me share my screen and then just pull up the ticker.
It's MNT. But while you're pulling that up, so there are a few assets like MNT I want to accumulate. Virtuals also coming down into a level where I'm interested. So for me, it's just about accumulating some quality assets. Yeah.
Yeah. So what I do is, how I use those weekly bands to identify the high time frame context,
Yeah.
You do the same the other way around, right? So for example, it's a mix of both. So if you see here, if I'm just on the weekly chart, weekly, you can see once we start to cross bearish and like the weekly bands became resistance on the underside, then this is like for me, I wouldn't fucking touch this. Now, how I approach it is like, okay, if I like the project and I want to buy it, I'm thinking, okay, just high time frame, obviously this zone here has been key support, right? I would say a bit further down, but like 0.56. Then what I do is I drop down to the daily. Okay. So you can see here, daily remains bearish. We cross bullish, back to bearish, bit of bullish, back to bearish. So once you start to see on the daily time frame, the bands cross bullish and bearish, you can start anticipating the formation of a range. So what I would do in this instance was like, I'd have this as my range low. Let's make it a bit different color. I would have this as my range high. And I would call this my my accumulation range, right? Because it's like uptrend, distribution, downtrend. Now we see like some sort of base. So in this instance, we do trade lower. But the fact is, once the price reclaims, then like that's kind of the deviation. So how I would play it is I wouldn't touch it at all here because bottoms take time to form. So I would let it do its thing. And then once these bands start to just like go sideways like this, like exactly like this, then I'll be like, okay, I'll start chipping in. Like, okay, so here, bullish, bearish, I'd start just chipping in maybe here, chipping in at the range low, chipping in on the reclaim. And then, yeah, we trade below. So it's like we kind of come into that key level there, which is held as support. And then chip back in on the reclaim, and now I could set my hard stop here. But I'm just waiting to see those bands cross over on the daily. Because otherwise, and I think otherwise you're just going against the trend, right?
Yeah.
Because it's the same shit here, right? We're bearish, daily bands are resistance. You get a push up, but it's not going to be reversed into an uptrend. So push up, then we get back below, and then you're like, all right, well then I'm still waiting. And then you see here, we form a range practically, right? So price takes out these lows, but then we're seeing like, okay, bullish, bearish, we're holding. So like once you see those bands cross like bullish and bearish, then you can either like chip in within here, but you got to accept like maybe quit to cut below. But then once you trade above, then like, okay, well, this is now I'm on the tail end of the accumulation range. The last thing you want to do is get in. To me, this is still a downtrend. So I would wait for that base to kind of chip in. Because otherwise you're just playing like the counter trend.
I think it's a good strategy in general with altcoins to wait for momentum. And it's kind of why I haven't been entering many altcoins recently, because otherwise you're just catching a knife. I think the only exception you can make is like if you're really, really, really convinced, and if there's strong evidence that altcoin will come back, then you might be able to just get away with catching a bit of a knife. Like Hyperliquid, for example, pretty convinced it's going to come back. Like M&T, I would say it's in the same category because it's basically a bet on Bybit. So if you're betting, that volatility will come back, given how they've introduced the token into the exchange, there's a lot of benefits to holding the token. So a lot of whales, VIP traders like holding it. I think Bybit has a pretty sticky UI. So that can give you a bit more confidence. But with most coins, I think it's very smart. And even with this one too, by the way, but I just think in general, waiting for momentum is a smart thing to do, because like it's really, crypto is a game of survival. Like during these times, these bearish periods, you're just trying to survive. So catching knives can like really impede your ability to do that. It destroys your dry powder, which makes it really hard to kind of climb back. So yeah, I think it's a good approach to take. I think Fabian, you jumped the gun a little bit. I don't know if you're gonna just average down. What's your plan with an asset like this?
Yeah, no, I did buy a little bit. Where was it? Like around the low 0.8s or mid 0.8s or something like that. And you're right, it was a little bit early, but the way I was thinking about it is this is the area here, as someone who is personally not very technical, with charting setup, stuff like that, and more so just looking for very high time frame accumulation opportunities. This is the area that I'm comfortable starting to nibble and accumulating exposure and holding that through any volatility, and even seeing future volatility as a gift to accumulate more for the longer run. And like you, M&T is a coin that I'm personally bullish on out of the altcoin universe in the long term because of their relationship with Bybit. So yeah, we'll be looking to accumulate lower if we get it. And the next stop I'm personally looking at, actually like Morin, would be towards the lows of its previous range, in the middle of 2025 that he has highlighted there.
Like 57, 50, yeah. That would be a gift, but yeah.
I honestly think anywhere between 0.65 and 0.55, like I'm not a fundamental person, so listening to you guys talk about this project, now I'm thinking, okay, how would I really enter this properly with my technical skills? And I think definitely, you got the swing low at 0.68. So it's like, if you don't know much even about technicals, then already just this as a high time frame zone, you have such a clear invalidation, which is, trading below 0.5. And to me, I just like to approach my spot as like a leverage, is just entering in where I'm going through with the highest probabilities, closest to my invalidation. But as you say, sometimes if it's a really good project, then you're not going to get those really perfect levels. So I feel like anywhere, even I'll drag it up to here. I think anywhere within this level is where I would build. And the only advice I would give is just remember you're entering on the sort of the front end of a accumulation range. So you don't need to size in very aggressively. So if you want to get some exposure because it's a good project and you really do believe fundamentally that it will run back up, then if I'm going to allocate, let's say $1,000, I would go in, you could maybe start even here if you want to. Go in with 200, right? Maybe go in with another 200 as we trade it to the swing low. So I'm already up, I'm already into 400. I can add another 200, if we trade anywhere into the lower band of this region. And then what I can do is for the rest of the 400, I can wait to see. You can see here, every time those bands on the 2-day cross bullish, that was pretty much the end of the accumulation range. So you can then wait and add most of the portion on the back end, as we're trading back above that level. So the key takeaway is build in slowly and with smaller amounts at the start when there's less confirmation. And as you start to get more confirmation, it doesn't matter that you might not get the best entry at the lows. But when you have more confirmation, you can size in more. And that will sort of make up for that maybe potentially higher entry than you would have caught. Because most people, including myself, when you're buying at the complete lows and it's been in a downtrend, you're very skeptical in the moment. Your emotions are high, you're questioning it, it could break. And what's helped me is just slowly building in, and you add with more confirmation. And that's sort of how I would sort of structure, is just wait for some base to form and then start chipping away and chipping away.
The other thing I recommend with alts is because they're so reflexive to Bitcoin, make sure it's aligning with Bitcoin as well. So if you're taking a long at Bitcoin at 80K, and there's reasons for that, try and look for altcoin setups which align with that. Because for example, if you're starting to average into MNT but Bitcoin just lost 78, it's a little dicey, So it's good to have momentum with alt and Bitcoin aligned. Typically they'll align each other, to be honest, but it's good to pay attention to both. Typically I'll use Bitcoin as a risk barometer. So if Bitcoin's in an uptrend, happy to take on more risk on alts. Bitcoin in a downtrend, clearly going to take on less risk on alts. I'm wary of this going too long. So I don't know, Fabian, if if there are any alts you want to mention today as things you're looking at. I think for me, Zcash, MNT, virtuals, hyperliquid. These are probably a few of the majors I'm happy to look at accumulating. Nothing I've bought today, but looking at for multi-month. But don't know if there's anything that you want to add to that.
I mean, nothing really in particular right now. As
I saw Arrow you were looking at.
Yeah, I was. I did actually bail on that one for the time being. I do have my eye on it for, if the markets turn around. But the way I'm looking at alts right now, kind of to your point about, aligning it with your view on Bitcoin, is I kind of want to see the dust settle with Bitcoin first. So at this point in time, I'm on a little bit of kind of like a wait and see mode with alts, want to see what Bitcoin does, and then scan through my watch list and kind of re-update, with any new setups, things like that, after price action has had some time to develop. So yeah.
Makes sense. Let's leave it here because there's a lot, I think, for people. But we could probably talk for hours. But yeah, we'll be back next Friday. Never been more important to stay in the loop. But I'm back to daily updates during the week. So Noti Gang. Or actually, I'll pick a couple Noti Gang people. I've been giving away some money to people that comment. I'll do 2 today. Ivan and Tommy. You guys can email for $100 each if you're watching at this point. So let's see. But yeah, thanks guys for joining. Been a pleasure.
Yeah, that was great. See you again next Friday then. Thank you.
It was light and now it's dark. So that's how long it's been. See you guys later.
Take care.